Hi, my name is Fulton Abraham Sanchez. I'm the CPA of the firm FAS CPA Consultants, and today we're going to speak about tax planning for cannabis industry. The cannabis industry is divided into different types of activities. There are producers, there are wholesalers, manufacturers, and retailers. And the deal with each one of these activities is that if you have an item, that you are producing an item, selling an item, and you are also selling other items, you have to have two set of books separated for each one of these activities. So one set of books for cannabis exclusively, and another set of books for any other activity that you have, even if that activity is within the same company and within the same store. For something I will explain later. Now, as a tax principle, one of the worst things for this industry is that the expenses, the regular expenses, utilities, repairs, are not allowed to be deducted from your income. Meaning that any kind of expense separate from the cost of goods sold will not be allowed to be deducted for tax purposes. Meaning that you will pay higher taxes. The only amount, the only item that are allowed at the federal level to be deducted from the sales or the income is cost of goods sold. Now, many times, and this is even taken into court, many times the cannabis business, cannabis company, they want to report, they want to include the expenses as a deduction of the income, and the IRS will not allow that. Even they have taken that into court, and the federal court, they have said that there is no deduction of expenses, even though the expenses are commingling with any other item being sold in the store or being produced. For example, there is a cannabis store that is selling cannabis items, and the store is not cannabis exclusively. It's also selling other items. Within that store, even though there is cannabis items and other items for sale, the cannabis items, the accounting of the cannabis item should be separated from the accounting of any other item that is sold in stores. Because remember, you will not be able to deduct expenses from the cannabis activity, but you will be able to deduct those expenses from any other item that is not cannabis related. So that's why, as I said at the beginning, you need to have two set of books, two set of accounting, one for exclusively for the cannabis industry, that will not be allowed to deduct expenses, but only cost of goods sold, and also one for the other activity that will be allowed to deduct expenses and the cost of goods sold, and that activity will be calculated in a will be done for on the lower taxes. But remember, this is something that until the federal government approve the legality of the cannabis industry, then that will continue. So you just need to play with the rules, stay with the rules, and don't try to do anything else, because the courts will not, the IRS will not allow, and even if you take the IRS to court, the courts will not allow it, regardless of the reason that you give to the court. And these are already tested in courts. Now, at the reporting level, remember that even though the cannabis industry at the federal level is not legal, in some states have been legalized that activity, and at the federal level you have to report, you have to complete your tax return to the IRS and also to the state. The state follow tax principles related to the expense deduction similar to the IRS in those states that the activity is not legal. Some states like California, that the cannabis industry is legal in that sense, then you will be allowed to use the expense deduction from the income, but only to the state level. So even though there will be not only two set of books if you do other items apart from cannabis, it will also be two set of tax return, one for the state and one for the IRS, for the federal government. But the state will allow you to the deduction of the expenses because the activity is legal at the state, but not at the federal level. So you have to be very careful whenever you are in a state that the activity is legal and you are doing this dealing, to be careful in not overpay your taxes at the state level, where the state is actually allowing you the expenses, the deduction of your expenses. You also need to remember, if you have employees, you need to pay payroll taxes, like any other company. And if you are doing retailers, and you have doing activity at the retailer level, then you have to pay sales taxes. To help to the community that it's growing and growing in terms of their consulting for the tax-related activities, we have created some plans. And between the silver and the gold and the platinum, each plan is designed to help find the best alternative for the cannabis company. For example, the silver plan will include the accounting, then the gold will include the accounting and the tax filing, and and the platinum we also include the consulting. So it will not only the accounting, the tax filing, and also the consulting, meaning that it will be a consultation on an ongoing basis whenever you need. If you want more information, you can check our reproduction list and to see more videos, and subscribe to receive updates when we post more videos. If you want, send us an email. Check the link that we have here in the description box to our website, Fast CPA Consultant, and send us an email for more information.